Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. In the second video today we will take a look at the Kiwi dollar. On the gold market that we're usually tracking, currently situation stands mostly the same as yesterday, so not much to add to the analysis that we have prepared recently. But on the Kiwi dollar we have the long played scenario, and last time we have take a look at it a couple of weeks ago. So this setup stands on the weekly chart. And yesterday we have very important add-on to this scenario that triggered significant action. As you know, this was the statement from the Central Bank of the New Zealand, and the comments that have been done have been made by the Central Bank were not as dovish as market expected, and that has led to a significant jump on the Kiwi dollar. Also, another support Kiwi dollar has got from the Donald Trump statement, and he has given the hint that the tariffs increasing against China could be postponed. So as you know, from the 1st of March, the tariffs should be increased from the 10% to the 25%. But Donald Trump said that he has intention to meet with Mr. Xi, and maybe the increasing of the tariffs will be postponed. So that also has supported currencies, especially Asian currencies, and provided support to the Kiwi dollar as well. But this is the fundamental background. What we have on the technical step. On the technical step, guys, since our first analysis that we have provided on this topic, it was in December, or in the beginning of the year. So this was mostly almost couple months ago. The first background that we have here for a long-term trade is this bullish grabber. This bullish grabber suggests the taking out of this stop. And specific of this trade stands with the ABC bottom extension, because the COP target already has been hit, but the COP stands below this stop, and grabber suggests the taking out of this stop. It means that market should move above the COP. Since market will move above the COP and taken out of this stop, the logical next objective point will be the OP target. So it means that market should complete AB equals CD action up, which stands around 71 even. So that's our idea of the trade on the New Zealand dollar. Potentially this trade will not change the long-term balance, so it will not erase the overall bearish tendency that we have here. Mostly it even could give us large bearish patience, regardless cheaper to sell on the monthly chart. But currently we are following with this ABCD that probably will last for a few weeks more, and that's very good because we have the clear stop on the weekly chart that provides the clear direction that helps us to make the trades in the same direction. So that's what we have here on the weekly. The recent comments from the New Zealand bank could give us another grabber, guys, because you can see this very fast action after retracement has followed and COP target has been completed. We said wait for the pullback and keep an eye on the possible opportunity for taking the position on the long side, because we have bullish context on the weekly chart. And as you can see here, although this week has not closed yet, and it's 2 sessions more, but the chances that we will get the bullish grabber here looks very nice. And as a result, this grabber suggests also taking out this stop. So that will be very good opportunity. Another moment here that exists, and we have talked about it already, take a look what has happened with this bearish engulfing. We haven't got any deeper retracement, but market just with the upward action has erased this bearish engulfing pattern. That tells that some power still exists in the Kiwi dollar. Maybe it's not really very clear. We did not see some really outstanding rally that could be, but some demand for this currency exists, and you can see this on the weekly chart. Now on the daily chart. On the daily chart you could see our ABCD pattern that we have talked about, and take a look that market has completed COP. As soon as COP has been completed, we were waiting for pullback. This pullback right now is done, and market has hit major 50% support. That's also daily oversold. Skyrocket action has happened by the comments from the New Zealand Central Bank, and potentially, guys, here we could get the butterfly sell. This butterfly has the target 70.84 that agrees with the idea of the ABCD target. So the upward action could be also be finalized with this butterfly pattern. What does it mean? It means that we have the bullish context, and we could keep an eye on the possible bullish patterns that could be formed on the intraday chart based on this rally, because this could become the bullish grabber that we could keep an eye on with the possible taking the long position on the Kiwi dollar. So on the follow time frame chart, we see that market has hit 618 resistance and the weekly pivot resistance one, jumped above both pivots. This is monthly and weekly pivots. So we could just keep an eye on the possible pullback here. Maybe this will be kind of the ABCD patterns, will give us the Garters triple to buy or something of that sort. So initially, if you remember, we talked about the hand shoulders, because that was the left shoulder hand. It's been completed by the butterfly, and we said, well, maybe market will show a bit deeper retracement of this ABCD pattern. Well, theoretically, this is possible because grabber could fail, but it doesn't make any barriers for us for just taking the probable taking the long position if market will provide us with a bullish continuation pattern, because on the background of the statement of the central bank, if we will get the grabber, it's possible that the market will continue upward action immediately. That's also possible. So besides this rally as a part of the right arm on the hand shoulders, it's not really a good sign, because on the right arm the bears should control the market, and the first rally right at the top of the arm, it's it's a warning sign for a hand shoulders pattern in general. Whatever scenario will be realized with the hand shoulders, market will show a kind of the ABCD action down, or market will continue upward action immediately. If we will get the position on some retracement, we will be able to protect it with the break-even stop, because momentum of this rally is very good. And for example, if market will show ABCD retracement, we will take the position here, but later market still will drop this support and show the upward and downward action with this ABCD pattern. With our position taken, probably some minor bounce still will happen, just because of the momentum, and that will let us to protect our position with break-even stop. That's why I think that this could be a relatively safe trade. If market in this case will continue to move up and we will be correct on this, well, this will be much better. So as you can see, yes, some uncertainty exists on the New Zealand dollar here, because we still do not have yet the direct upward continuation here. This market stands at the resistance, so both patterns still stands on the table. But overall setups, as you can see, relatively clear. We have the clear patterns, and we could understand what's to watch for and what to expect and how to manage the position depending on the situation. So depending on what we will see. So definitely the situation on the Kiwi dollar and the overall setup is worth of our attention, and we will continue to keep an eye on it.